Hello traders, the title of the video is Analyzing FX market more profitably like the top Fibonacci trader. Are you an FX Fibonacci trader using the Fibonacci retracement and the Fibonacci extension in the forex markets? Alright. Or are you willing to use the Fibonacci extension and Fibonacci retracement to tame the forex market? The financial instrument that we are analyzing today is the Euro Swedish krona. Right? Do you trade the Euro Swedish krona? The epic is EURSEK. Eco Uniform Romeo Sierra Eco Kilo. Alright, Euro Swedish krona. Alright, let's get started. So, looking at this chart, I'm on a weekly chart, by the way. So, you may say, George, why are you on the weekly chart? Because the reason why I dropped to the weekly chart, some traders lock the weekly chart, and we can swing trade using a top-down trading method on a weekly chart. And not only that, alright, it's because there is no big difference between the weekly chart, alright, and the monthly chart. So this is the monthly chart. If you look at it, no big difference between the weekly chart and the monthly chart. That's why I switch to the weekly chart, alright. So looking at this chart, alright, where should you buy or sell? Now generally, trader will say, okay, should I buy or should I sell? Right. So if you ask that question, should I buy or should I sell? You are asking a question like an ordinary, okay, technical trader or forex trader. The most sophisticated technical trader or market participant, financial market participant, do care about at which price they are buying. Therefore, they will ask, where should I buy and where should I sell? That's a more important question than the first question. Where should you buy and where should you sell? So talking about analyzing FX market more profitably, like the top Fibonacci trader, we use the Fibonacci retracement, all right, to determine where should we buy or sell the Euro Swedish krona. All right. I've been talking about Fibonacci recently because there is a price action Fibonacci trading strategy that the professionals are aware of, but many ordinary traders or beginners do not pay attention to those key levels. So what is happening here? All right. So one thing you need to understand is that if a financial instrument goes down for some time, you can see here, okay, almost 3 years it was going down. And it finally reached this bottom here. All right, so price was going down. Okay, so that's the first reaction. Now it starts going down. Where is it going? So that's a very important question because no financial instrument is going up or down for no reason. It's going to the 50% Fibonacci retracement level, or this move from here to here. Therefore, we will apply Fibonacci retracement to that price action. That will help us to determine where should we buy or sell. So where is that 50% Fibonacci retracement level? Is the peak line that I'm going to put on this chart. Can you see? So before the price even reaches that level, the professional traders that understand the Fibonacci price action trading will draw that 50% Fibonacci retracement level. And as it starts going up from here, they will expect a resistance there. Have you seen a resistance? Yes. There are many resistances here. People try to sell it here. It went above it a bit into the zone of 61.8%. They are selling in that zone. So you want to know that if the financial instrument goes down for some time and start going up, our first ultimate target is the 50% Fibonacci retracement level or the prior bearish move. So if you are asking the question, the correct question, all right, like the most sophisticated market participant, where should we sell? We should be looking for opportunity to sell in the zone of a 96555. All right. Or if you buy here, where should you take profit? You'll be looking to take profit here. There was a midpoint target somewhere here, but I don't want to talk about that. Okay. The next question, also again, where should we buy? Okay. If they start selling here and the price start coming down, forming lower lows, lower high, the price looking for a better support level. If the price reaches a better support level, a final support, that will be the place where we should look for an opportunity to buy. So that will answer our question, where should we buy? So before the price even reaches that level, professionals already know that if people are selling here and they start going down, okay, traders that are following us, that day pro traders, already know that. Okay, we'll apply Fibonacci retracement one more time to the price action from here, where my cursor is, to this point here, and we will highlight the 61.8% Fibonacci retracement level. Where is that level? I'll call out that level into orange on my chart. So talking about where should we buy, is that where people are selling here, and the price finally reaches this level that I'm coloring now into orange, the level of 87573. That will be the zone where we'll be looking for an opportunity to buy. Does it mean that the price will definitely find support there, or should we just buy when the price reaches that orange line? No, we should not just buy. We look for trading setup in the vicinity of that key level. If the common setup is kaput and we identify a clear-cut bullish trading setup in the vicinity of 8573, we'll be willing to buy there. All right, but the price can do something completely different than our expectation, which means our expectation that to find support here, but the price can break below that level and continue to go down. And if you break below the level of 87573, which will break below retest or form a bearish chart pattern below that level, or we receive a clear-cut short signal below that level, and we are selling, our target will be this low here in the zone, I'll call it now into green, all right, in the zone of 82032. So if the price did not find its supports at the orange line, which is 87573, and start coming down, we will be expecting it in normal condition. I'm choosing my word carefully. It does not have to come all the way here. Normal condition, that will be our bearish target. And if you come here, it will form a double bottom chart pattern. If the common setup is kaput, after the double bottom chart pattern is formed, we will receive a clear-cut buy signal here using what? A different time frame trading method. We will be interested to buy. So those are the levels where we'll be interested to buy if we receive a buy signal using a top-down trading method. So will you agree with me for the first time that using Fibonacci retracement in conjunction with the normal technical analysis will help us to trade this euro Swedish krona more profitably? All right, let us know. Do you agree or disagree? I don't mind. All right, you can disagree. We are still friends. All right. Okay. Color that arrow into black. So you have a question, yes or no? So you are wondering, if the price came down to the orange line and found its support and start going up, where is the next target? That's a very good question. If we come to this level here and they find its support and start going up, the first target is the 50% Fibonacci retracement level, this one here. All right, because it's a resistance there, people were selling there. So if you buy here, start going down, you want to watch your first target, minimum target will be at 96555. If it breaks above that peak line, 96555, we'll be expecting it, okay, to go to which level? Are you a Fibonacci trader? Are you a subscriber to the Day Pro Trader YouTube channel? Do you know about price action Fibonacci trading? We'll expect it to go to which level? You should know this now. Something that the price is doing all the time. And as a technical trader, you want to know that. If you find a support, at a 61.8% Fibonacci retracement level of the move from here to here, the first target is the pink line, which is a resistance here. If it breaks above that level, we'll expect it in normal condition, choosing my word carefully one more time, to reach the level of what? The 78%. I don't know, normally the Fibonacci number is 78.6% level, but I use exactly the 78.00% level. So that will be another place. If you start going up, come to this level, that will be a place. If you're going up to this level, we'll be looking for opportunity to sell here. If it breaks above further support, we'll look for opportunity to buy above the pink line. If you buy there, start going up, we'll be expecting it to find a resistance here. And this is another place where we will be looking for an opportunity, to sell. So it's not about asking the question, should I buy or should I sell, George? The correct question is about, where should I buy or where should I sell? And to answer that question, we will use a Fibonacci retracement or Fibonacci extension. So before the price even reaches that level, we draw those lines and we are just waiting. And if our expectation is fulfilled, we use a different time frame trading method to trade it. But if the price is printing something completely different, we will not force it. We just flow with the price. How do we flow with the price? We use the market pattern. Draw the channel. Here you can see that the price was in a declining channel, roughly. If you accept that, roughly. So we'll implement a bearish strategy. So the market pattern will determine the appropriate strategy that we must deploy. It start going up. It was in a rising channel until it come out of that rising channel one more time. So use the market pattern, to help, your decisions, If it breaks above the 78% Fibonacci retracement level, right here, if you come here and did not find a resistance, we did not receive a sell signal, we did not see any bearish trading setup here, but instead it breaks above that level and finds support, where will be the next target level? That will be, this level here, the 100% level, at 111.37. If it breaks above that 111.37, what will be the next target level? The next target level will be the 138.2% Fibonacci extension level of this move from here to here. I did not say from here to here, from here to here. So you apply Fibonacci extension from here to here. So your extension will be up here. Because if you apply it from here to here, the Fibonacci extension from here to here, your extension will be down somewhere here. Apply it from here to here and highlight the 138.2% Fibonacci extension level of the move from here to here. All in all we do care about is, where should we buy and where should we sell? Once we identify those key levels, as a technical trader, we are looking for trading setup. We're looking for high probability setup around those key levels. We draw our channel, we don't want to violate the market pattern. And if we want to buy around those key levels, we use a top-down trading method. Very often, what the price will do around those key levels, either you break above it and find a support or form a higher low above it. So prior to bullish signal above and prior to bearish signal below, in all cases, to control the risk, you must use a top-down trading method. So this will conclude our discussion today about analyzing FX market more profitably, like the top Fibonacci traders. The financial instrument goes down from point A to point B, as it did here, start rising. Professional will watch the 50% Fibonacci retracement level. If the price found a resistance at the 50% Fibonacci retracement level, start coming down. Professional will be watching a level of 61.8% Fibonacci retracement of the rally from here to here. If you find a support at that 61.8% Fibonacci retracement level of that rally, professional, the first resistance is the previous 50% level, and the ultimate target at 78% Fibonacci, okay, retracement level of the move from here to here. If he breaks above that level, we watch, okay, the beginning of that bearish move. If he breaks above it, we apply Fibonacci extension of the move from here to here, and we highlight the 138.2% level somewhere up here. If the price breaks below that 61.8% level, Fibonacci retracement level of the rally from here to here, we'll expect it to come down to this point here. All right. All in all, use the top-down trading method, follow the trading drill, the setup, the signal, and the low-risk entry point. If the signal fails, just come out. All right. Draw your channel and do not violate the market pattern. So this will conclude our discussion today about analyzing FX market more profitably like the top Fibonacci traders. If you have any question or suggestion, feel free to put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you dislike it, alright, mark it down by giving us the thumb down. Alright, if you think this is an essential tutorial, feel free to share with your friend on Reddit, Google+, Facebook, and Twitter. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about analyzing FX market more profitably like the top Fibonacci traders. Happy trading to you all and speak to you soon.